presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to John in Austin, Texas. Hey, John, what's going on?
Hey, buddy.
How you doing, man?
I'm so good I can't stand it. How about you?
Good, man.
God bless you. All of God's best to you and your family.
Wow.
You teach us how to make money. You are such a man of integrity and honesty.
Right.
I so admire what you do in your show, and you just deserve a whole lot of credit. And the other thing is you would be hard-pressed to invest in something that's going to bring you a better return than that gold report. It is fantastic, buddy. I just so appreciate you helping us make money.
I appreciate it, man.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Market-wise, let's take a look at it out here. We have the Dow up 26, NASDAQ up 10, S&Ps are up 4.5. Gold contract up $23.50, trading at $1,308 an ounce. Silver up 22 cents at $20.06 an ounce. Platinum up 10 at $1,463 an ounce. Copper down 4 pennies at $3.16 a pound. Light sweet crude off 45 cents at $96.93 a barrel. Bonds, we have the 10-year trading up 4 ticks at 125.16. 30s up 4 at 138.16. King dollar down 111 ticks, trading out at 81.50. The euro is up 5 at 133, and the yen is down 51, trading at 102.09. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? We're at 1921. You get a sideways move. Volume characteristic out here. Let's see what we have. You're at 442. That means it's going to come in around 650. Bottom line, folks, the market can't get price. It's tried twice intraday here to get to higher price, failed both times. If you do go over to the UK and go over to Europe, bottom line, neither one of those could hold price. UK was down 46 at 6636. DAX in Germany, we take a look at the DAX in Germany. DAX in Germany down 59. We're at 91.30. The benchmark out here, which was the, actually I got to go to the 4th, not the 5th, because it's the 4th. Let me see. February, right? Yeah, it's the 4th. So February 4th, which is the benchmark, and the DAX is 9071. Well, we broke it today. That is, bottom line, saying two different things. Number one, we're going to get down to that benchmark the 5th of February, and the S&P, that's a long way down. Number two, though, and this is where you're going to watch the DAX in a huge way. The way this is set up right now in the DAX, it looks to me like it can blow away 8,900 in a heartbeat. You blow away 8,900 in the DAX, guess what? You are going down another 1,100 points off the 8,900, so you get 7,700 coming at you. The DAX at this particular point, folks, is back to November of 2013. Let's go to our own S&Ps and look at this again. And the deviance in the market today is really cool. And what that specifically is that we had the markets across the world down. Our futures were down 8. What happens? Market comes in, it pops a little. Is it going to stay up? I suspect no. Why? As we go through this market, you're going to see why. Let's go over to the gold contract first. Gold had an expansion of price today. Had the volume behind the move, GCZ4. We take a look at this gold contract. 144,000 contracts traded up here today. $23. That is going to set up a run now for the 1347. This is what we needed in the gold market, folks. We had come down into the sign of strength on the 19th of June. That's where we went topside 1277 to 1322. We did it with volume. We backed down with lighter volume. We tested three separate times. Those lows never got to the low, which is positive in itself. Had lighter volume. Now we had the sign of strength. You get the sign of strength. Number one, we're going to go after the 1347. I expect what we're going to see up here, we're going to go after this 1391. That's how this baby is set up right now. Bonds. Go over to the bond market. Check this out. This is just bonds, folks, are building cars in an extraordinary way for not just higher price, much higher price. Bond market today. We go to the 10-year first. Now, your swing point, your B point in the bond market in the 10-year bond is 126. That's the high of May 29th. The low of that day was 125.13. We today went to 125.24, laying right below it. We've done 1.1 million contracts. That's saying that you're building cars. It's going to blow away that B point of an ABC structure on the way up. The 30-year had already done that. 30-year goes higher again today. We did 328,000 contracts out here. We're at 138.17. It's been as high as 139.80. Bottom line, it's a very large ABC structure on the way up. You have the 10-year yielding 2.471 right now. We go over to King Dollar. We take a look at King Dollar. Actually, let's go to the silver market next. SRU4. Silver out here, the actual contract, the silver equities are really acting nice, folks. Silver contract, 47,000 contracts out here today. Now, silver needs more of a bump up. But the equities, the silver equities are basically saying silver is going to get that bump up. If you go over the Pan American Silver, PAAS, you'll see you get a little wide price spread, accelerated volume on that baby. Heckler, another silver stock, that's moving with some action also. So I suspect coming up the rear, you're going to see that silver market moving, meaning the actual physical metal. King Dollar, we go take a look at King Dollar out here. King Dollar's down 111 ticks out here today. Went to a higher high, basically back down. King Dollar wants much higher price. We are at 81.48. And what you're going to see out here, the last swing point out here, had 24,000 contracts. We've done 27. Bottom line, King Dollar is making the run for the 81.50 mark. Inside some of the high-volume stocks out here, and this is how you can tell, folks, that this correction is going to be vicious. They are taking some stocks apart. I mean apart. You have Walgreens down $9.80. You have Cognizant Technologies down $5.92. Time Warner's down $10.59. If we go over to Walgreens first, we take a look at Walgreens, WAG. If you want to see how equities, yes, they can go higher with no volume, but guess what? When they drop out of bed, everyone gets toasted and roasted. All of the above. Walgreens has been hanging up at the 75 area for quite a while. All it takes is actually, it's not even 6 hours yet. It's 5.5 hours, and what Walgreens has given back is October of 2013, almost a year. Where's Walgreens going? Next stop for Walgreens, folks, is down at $44. Right now, you're at $59. We take a look at the monthly basis, and the way the monthly basis is set up, man, oh man, yeah, $47. 47 is the number. With Walgreens, you come off the high, and you're coming off that high with volume. CTSH, this is Cognizant Technologies. This is also getting toasted and roasted out here. It's down $5.90, trading at $44. Monster volume. We take this, put this on a 3-year weekly. What you're also going to see is zero volume when we went from $32 all the way up to $52. It hangs at $52. If you want to see what distribution's all about, check this out. You're at highs, you're going sideways, and we have been going sideways, folks, all year long. All year, okay? Right from December. December was at $46, goes to $49, gives it up on price, on volume, all of the above. Cognizant Technologies right now is going to be a dramatic failure. We're at 44. 38 is the number. You know, it's a big number. TWX, Time Warner. Now this is really a cool one. How this is shaking up. So you get Time Warner down $10.66. What the Time Warner deal was about is that you had Murdoch with Fox wanted to take over Time Warner. When that happened, Huge expansion. Time Warner had closed on the 15th of July at $70.01. Following that night, Fox wanted to take it over. Stock goes up the next day to $84.80. Monster gap. We talk about gaps always getting filled unless you get a takeover, right? Bottom line, gets to a higher price of $88 and then gives it all up today. This gap's going to get filled, the full gap. The full gap there is $71.46. Right now, it's $74.15. And bottom line, folks, is that if you are lucky enough that you are in an equity that has an expansion like that, and you get the takeover price, take it. All those folks that up there, I'm sure there's many of them that did take it. There's many of them that didn't take it. That was the full price that was right in there. It was baked into the price. They thought it was going to come in higher. Bottom line, it's coming in low. We're going to talk a little bit more about that when we come back. 877-927-6648. Coming right back, folks. Stay right there.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foresight Fund Services, LLC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We have the Dow right now up 15. NASDAQ is up 5. S&Ps are up 2. You get the NASDAQ flat. If we go over and we take a look at some of the Dow stocks, what do you have happening in some of the Dow stocks? You have American Express flat. Boeing is down 234. Let's go take a look at Boeing for a second. Boeing has been having a tough time holding price. Look at this, man. It's going to be wild watching this thing shake out. Okay, so Boeing is the next one that has broken the benchmark, folks. The 5th of February benchmark, that was 118.77, breaking it today, and you are, it's going to be close with it, breaking over volume. We're at 5.1 million, and it's 9 million. So we're not going to break that with volume. It looks like it's not going to hold price. That's on the daily. We take this and we put this on the weekly. What you're going to see on the weekly, weekly's 44 million. Doesn't look like she'd do 44 million either, but she's not gonna hold price. Boeing's on her way down to 108. That's a big number. What's important, watching how these markets are going into your benchmark, folks, of February 5th, is a telling sign whether, in fact, the S&P itself will hold that, February 5th time frame. We have ExxonMobil up 68 cents. That's after getting killed yesterday. Honeywell's down 65. United Technologies is off 106. If we go over to UTX and you take a look at this, what you have with United Technologies, she took out the benchmark yesterday, actually a few days ago. Yeah, the benchmark's 107. We're way below that 107 right now. We take a look at United Technologies, and you lay this down. This has come down with vicious volume. United Technologies right now is trading where it was basically a year ago, and that's not going to help the situation. Why? United Technologies right now came off the high with volume. United Technologies right now is screaming to get down to 83 bucks. That is one big number. Now, in the context of, let's go to some more Dow stocks first, then I'll get back into the S&P. DuPont is up 78 cents. You got Merck down 13. Hewlett-Packard is flat. Walmart is up $1.40. Walmart saved itself again. Let's go over to Walmart and see what's happening with Walmart. So Walmart has, look at this. This is pretty cool. Okay. Walmart, the benchmark on Walmart, 71.51, and it hit 72 yesterday. Now, Walmart have a decent bounce today, 5.8 million, but we came down on 10 million. So that's saying the bottom is not in on Walmart yet. It's going to try to get into those bottoms once again. And the way Walmart is set up, I suspect we're going to get down and hit the benchmark of that. Actually, Walmart's benchmark is in October. Yeah. Walmart, the February benchmark, it actually got into. And it got into it with volume. Check this out. So yesterday we did 10 million. The February 5th, no, I had 13 million. Bottom line, though, Walmart is building cars to go down and test that lower area once again. Amazon is, so now let's go back to the S&P for a second. So when we talk about benchmarks, folks, that's exactly what they are, meaning, high volume, low, hasn't been tested yet, been down there a few times. When we talk about the SPX, that low is a large number way down. The number that we're talking about is 1737. Now, that 1737 is lining up with many equities already. They've already come down there. We're at 1921. That is a monster. That's like 180 points down. It's a big number. In that correlation, the more equities that break the lows of February 5th, the higher probability that the market itself, meaning the rest of the equities, will not hold the February 5th benchmark. And if that's what ends up with the lineup, then you really better hold on, because the next level would be about 157. It'd be the highs of the 2007 highs before the market cracked. You know, I can make the argument, though, that you're talking about a 1,300 S&P. That is about as intense as you get. And if you're listening to any of the financial programs on TV, the bottom line is that they're saying on a continual basis, buy, 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 buy. That tells you flat out that this correction is not even close. I had a guy, there was a guy on there today, it was pretty good, actually. He was saying that, yeah, we've been in a correction for 3 or 4 months, and the correction was almost over. I totally understand what he's talking about and the correlation of we have been in a correction 3 or 4 months. The reason being is that if you do go back to the beginning of June, excuse me, what you do have is that there are many equities that absolutely have got killed. The difference in our theories is that that is what happens when you're going much lower. What ends up happening is you get gaps away, which we have had, and they're accelerating the gaps away down. The volume's exploding, and every time that something like that happens, all that happens is that portfolios lose an extreme amount of money overnight, very quickly. And what does that do to your margin? What that does to the margin immediately, folks, is that they have to sell something else in order to basically bring the margin requirements up. Why? Because when the stock is, you know, coming down, let's say 10, 20%, what ends up happening margin-wise, if you're fully margined out, that's double that area. Your account starts getting a little bit too close to getting a call. Most times, folks, even professionals, are going to sell something. After the close out here tonight, we get a lot of earnings coming out. You get Westar Energy's Harbor's Investment, Sandridge, Transocean. That's going to be RIG. Let's go over to RIG right now and take a look at RIG and see how RIG is trading. RIG. So RIG is trading at 38.34 right now. Oh, this has already broken the February 5th time frame also. February 5th, 38.47. Oh, that's March. Okay, 1 second. Hold it. Actually, yeah. Oh, RIG, this is interesting. So RIG had already broken the February 5th. February 5th was $41. March was the lower one. It's breaking that as we're speaking right now. This is going to be a monster ABC down. Holy cow. So check this out. Now, we shot the sector too, but this is really cool. Your A point on this is 55. Your B is 38. So 48. You got, what, that's 7. That's 17. Your C point is 46. So you're talking $29. You got an A to B equals C to D at $29. This is a mess. This is going to get killed. Let me pull this up in a monthly. Oh, this is something's wrong with Transocean. I'll tell you that, folks. I'm not quite sure looking at this technically, but this is an equity that has already come down from 163. It's at 38, and it's going to 21. So evidently, what you do have out here is this the Perma Basin, the amount of fracking. You don't need the large drill rigs that Transocean specializes in. It's Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. The Dow is up 17 right now. Nasdaq's up 4. S&P's are flat. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome Welcome back, folks. You get the Dow right now at 4. NASDAQ is up 1. S&Ps are up 1. And what you'll see out here, if we take a look at these E-mini futures first, you'll see this sell into the close once again. This is a typical sell each and every bounce that is out there. And as we come down, you're going to see how dramatically we come down. When you had this bounce out here today, folks, if you happen to be watching Target TV, you'll see that it was going into the 1340 time frame from yesterday. That's where 124,000 contracts are traded in the E-mini, and you got up there. The first time you got up there was with 31,000 contracts. You ended up testing that area with 19,000 contracts, gave it up in spades, had an expansion of volume. You go to 26,000. I expect what you're going to see is another expansion of volume. We're right at the 1915 area. All you have to do is get back inside this by about 1-2 points, which I expect we will. That'll get us down to the 1908 area coming into this close. That's on the E-minis. If you want to take a look at just the SPY, the correlation inside that SPY, pretty clean. As we came down yesterday, the first leg down to 1330 had 4.2 million shares traded on a 10-minute. Second leg had 9.8. Guess what? We go into that today with 1.8. We test it with 1.3. Your correlation is 1.3 against 4.2. You come back downtown. You hit 2 million shares. Right now, we've already done 1.36 million shares. You get 4 minutes left in this 10-minute bar. We're trading at 192.06, and that means you're already back inside the 192.11. And what does that set up? That sets up that you're going to run down to 191.60. Now, that would be a big number, the 191.60. But that is the way that baby is set up coming into this close out here. As I've been saying the last few days, these numbers are hitting, and they're hitting left and right, meaning you do the counter trend bounce, you get up to ICE, you get up to the swing point, give it up at the swing point with dramatically lighter volume, sell-off continues again, comes down the other side. So bonds continue to be strong out there. Bonds want to go topside with the vengeance, and I suspect we had the first move in gold out here today. It looks to me like you're going to get follow-through out there. We had the wide price spread. You had the accelerated volume. If we go take a look at the XAU and the HUI, XAU today, 226. XAU is going to make that run for the 106 area. Now, check this out. This is pretty cool. If, in fact, this is an ABC structure on the way up, it is a monster. The A point on this is 83, and if I did it conservatively, 101 would be the B point. So you're talking about an 18-point A to B in the XAU. That would give you, let's see, 127, 125 would be the A to B equals C to D. The high that was generated in March is only 107. Let's go see where 125 is. We'll put this on a 10-year. And if we take a look at 125, yeah, that's not bad. This is always crazy how this shakes up. So 125, actually 140 is ICE. So check this out. This is where, see, this is really cool when it's one of these, is this just a dead cat bounce? Or is this a true move higher, and we're going to go up to 225 on the S&P, on the XAU? If you're in the market, it really doesn't matter. What matters is that ICE, okay, a natural bounce, even in a market that wants to go lower, is 140 on the XAU. Bottom line, so that's telling me that more than likely we will see an ABC structure on the way up. My take, of course, is that we're moving exactly how we should be moving, meaning we're moving with volume, with price spread, after having tested those lows with lighter volume, end of a correction with, 2.5 years. The HUI, same setup in the HUI. The A point out here is 201. Your B point is 242. That's a 41 A to B. Your C point is 231. Yes, your 272. The HUI is 261. Is the March high. That also is setting up a higher price at us. And if we go take a look at the HUI and we take a look at where ICE is set up at, oh my God, this is a long way to go. ICE is set up at 322. 372. 372. You're talking about big numbers out here. Big, big numbers. No two ways about that. ExxonMobil. Let's go over to Exxon. Exxon, yesterday, folks, was bringing the oil and gas sector down dramatically. They all were. This is Monster ABC down. You know, can't hold price out here today. First leg down had 18 million shares. You bounced today on 7 million. ExxonMobil's making our way down to $89. And no doubt, it looks to me that if we take a look at all these oil and gas, we'll take a look at the large ones anyway. So large, this is what you have. Exxon is up 68 today. Chevron's up 75. You get Apache down 98. Devron's off 82. What you have is that the political problems in Europe, Ukraine, Russia, all of the above are going to be monster problems. They, you know, they're trying to figure out right now how are they going to do business with Russia when, in fact, Putin is going to basically, you know, slam on the brakes, and the rest of the world will see whether the sanctions get any heavier, which they should. But Putin was yapping out here today, which I expect he's actually going to do. You know, Putin's the one that's going to basically pull the plug here, folks. And I suspect what the next thing he's going to do, you know, he has the ammunition on Europe coming into the winter. There's no two ways about that. But what he also has in his pocket, which I expect he's going to use, is that he's going to use the aspect. This morning he came out and said, okay, we'll keep the accountants out of Russia. And what that specifically, you know, when I look at that, I said, oh, that's interesting. What was well, the accountants have to do with public firms doing books, doing business. That's a really quick way to turn around and to stop business ASAP, you know. Will he hurt himself? Yeah, but guess what? That's not even on the table. When folks are thinking right now that Putin is worried about hurting himself, there's no way. You got to remember something. He was the president for, what, 8 years. He put the other guy in as president. He started this presidency again. He has nowhere else to go but to be a dictator. That's it. And, you know, the rest of the world is kidding themselves. What you're seeing out here, and this is what is always a huge problem inside the context of me, capitalism versus society, is the fact that larger companies are basically keeping pressure on, saying, no, don't put these sanctions on, okay? We got to get our money out. That's what you have versus a Putin that is going to be basically, you know, my take is that whether it's 6 weeks, 8 weeks, the Ukraine, he's going to be into that eastern Ukraine. It's, you know, it's to me, it's right in the cards, and, you know, and we'll see what type of problems it has in the marketplace, you know. 877-927-6648. The financials, XLF. They're ready to crack also. Check out the XLF today. XLF is flat, 33 million shares. We came down on 49 million. Bank of America out here today. They got the get-go that they can pay a dividend. Guess what? Doesn't matter. Up 19 cents. It's an ABC structure on the way down. Bank of America is going to go after $14.34. You break $14.34, and that is going to, let's see, $14.34. That's not the end of the world. $10. $10.10. That's where BAC wants to go. You know, so, you know, we'll see how we get down there. That certainly is not 15 to $10. Yeah, that's a haircut in an extraordinary way. There's no doubt about that. Time-wise, as we've said many times, this whole thing is set up to basically have volatility, run into September, run into October, and, of course, as to the political atmosphere versus the monetary atmosphere, it's all out there in spades. If you do take a look at the GLD, if you do use moving averages, what you'll see over here is that the GLD jumped over its 50-day today. That, when it does jump, folks, you know, that's a sign of strength. That's what it comes down to. The 50-day was laying out here at 124.53. Bottom line, jumps right over it, has the volume behind the move out here today. We've done 7.8 million shares. We did 8.3 yesterday. It's going to lead a lot more than that, but it certainly has the volume to get up into the 129.21 area. And up at that area, it can be an ABC structure real easy because that area only had 6.3 million. That's where it gave it up, came back, tested the sign of strength from the 19th of June. Much lighter volume, and then takes off again with some juice. This is Tom O'Brien. This is TFNN. You stay right there, folks. We got the S&P's a flat. Nasdaq's up 3. You got the Dow up 15. I suspect what you're going to see here is that they're all going to be just slightly in the red coming into this close. Going to be right back, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
No No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Tom O'Brien.
Welcome back, folks. Right now, you get the Dow up 19, Nasdaq up 5, S&P's flat. Gold's up $22. We get the bond market. 10 years still up 4 ticks. You get the 30 up 5. King dollar down 126 ticks at 81.43. Volume-wise out here, what we'll do is that right now we're running at 516. Get 15 minutes. So that's going to be 600 million. About on the NYSE. On the NASDAQ, you're at the 1.6. That's going to set up about a 1.8. Bottom line is that this market can't handle price, folks. Last 4 days in the NASDAQ, S&Ps, Dow Industrials, you came down hard. NASDAQ got to 43.24. That was on last Friday, rather. You get that small bounce on Monday. Market's trying to get higher, just can't get it. And what that's all about is that we had been building cause for quite a while to get into the lower range. The lower range on the NASDAQ is 4371. You're at 4359. What that sets up the April 15th, rather, and February 5th swing points, the low. Because see, what we had, the difference in the NASDAQ was that the NASDAQ came back down when it came back down in March and broke its February 5th benchmark, and it did break that February 5th benchmark with volume. And so the NASDAQ is highly volatile, of course, especially on the way down. Let's go to small caps for a second, because the small caps are lining up to blow away the last 2 swing points, meaning the February swing point as well as the May swing point. The IWM right now is trading at 111.89. That 111.89 brings you all the way back to November of 2013. And how we come down here into this 107.44 is going to be crucial, because if you break 107.44, that's going to be a consolidation that has been laying out there since November of 2013. You break that, and then game is on for 99. So it's not the end of the world, but that'll be another expansion down. And, of course, we hit the highs of 120. So once you get to 99, that's about, 15% down off of those highs. The S&P looks to, at this particular point, has the furthest amount down. In some of these equities inside the larger, broader market have absolutely got toasted and roasted. If we go back over to Walgreens today, you'll see that Walgreens is buying the rest of the, I think it's Boots Alliance. Let's see. Alliance Boots, which is a huge retailer over in Europe. They decided that they're not going to do an inversion. And what that's all about, folks, they're smart not doing an inversion, because people, people are just going to, I'm sure most people are fed up with inversions, period. That, you can basically run under the American flag when things get in trouble. When they're not in trouble, let's go somewhere else. Let's stay in America, but, if something goes wrong, we want to go back and cry and have all our troops help them, and the senators help them, and Congress help them, and all of the above. And Walgreens' case, I think, was really smart what they did. And the reason being is that that backlash just on a retail basis, I think, would be pretty intense. Most of the larger companies that have done it right then, at this particular point, you know, it's not that they're retail. I don't know how many stores Walmart has. Let me just see for a second. But I'm sure it's an extraordinary amount of stores. I mean, almost every corner. It doesn't have how many Walgreens there are. But, you know, when you actually look at it, just about every single corner has a Walgreens store. The Time Warner deal, that's getting toasted and roasted, Time Warner and Fox. And, you know, Murdoch is maybe just playing the Fox on that one. He came out, he stopped the deal. Well, he pulled the deal away right before Time Warner come out with their numbers. They were decent numbers. The stock gets smoked, of course. And, you know, we'll see whether he comes back in and, you know, basically goes after that company again. I suspect that he probably is going to. I think it's just a maneuver. Most times, folks, they don't go through that much work for large mergers without a huge amount of negotiation and, bottom line, a huge amount of card playing in a huge way. Let's go to Ed in Natick. Hey, Ed, what's going on?
Hey, how you doing? I had a quick question about the SPX.
Yes.
I'm looking at a weekly chart, 4-year weekly.
Okay.
And I see it was down around 1,100 in the summer of 2011.
Yeah.
And I don't think the uptrend has been broken at all the way through today. If you look at that weekly
It
chart.
hasn't. No, it hasn't. Yeah.
So how come you're so negative about the doom and gloom and everything going down?
Well, I don't see it as doom and gloom, but that, you know, as to why it's going down, because you have these high volume spikes that haven't been tested, and they're going to get tested, man.
Well, but how many years have you been saying that?
I've been saying that quite a while.
So if you keep saying it, eventually it happens. Is that the deal? I think it's going to turn around here and break 2,000.
Well, that's all right. And no, let's answer that. No, that is not the deal that I'm going to be right at some point, Ed, okay? You know, God bless you. You're long. I love it. I hope you make a fortune, okay? You know, the same deal happened in 2007. When the spike goes, it goes. So, you know, I'm not out here, you know, to turn around.
How can you argue with that weekly chart that goes back 4 years and the uptrend continues?
Oh, I can argue with that easy, because the bottom. Listen, you're long. God bless you. I hope you make money. I'm short, and I hope I make money. We'll find out. Call me back in 6 weeks, and let's see where it is, and we'll see where the
6 weeks.
Yeah, that cool?
That's cool.
Okay, man.
All right. Have a good one.
Have a great one.
Have a safe one.
Thanks, man. That's what makes a market, folks. There's no doubt about that. And as to the aspect, you know what? This is something to wrap your head around, folks. If you don't understand that everyone that is in the money business, okay, they're always going to say the market's always going to go up. The business itself, okay, they have to say that. You have to wrap your head around that, because if you don't wrap your head around that, you're going to lose on a continual basis. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're going to be coming right back. We have the Dow up 15 right now. Nasdaq's up 4. S&P's flat. We're going to be right back.
Is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Jay in Boston. Hey, Jay, what's going on?
Hey, Tom, you really assemble a stable of amazing people. I mean, they all have different strengths, different areas. And,
yeah.
Man, each one is a superstar in their own way. I've seen it over the years.
Well, listen, man, we appreciate you being out there growling and prowling with us. If you guys and ladies and tigers and tigresses weren't out there, folks, we would have zero.
Yeah, it's unique, and it's, and it goes back to your basic belief of an open platform, which I've heard you say that years ago.
Right.
And it's really bearing fruit now, I would say.
Yeah, I agree. It is.
Yeah.
Cook it, brother.
Thank you.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. This is a card by Duke Ellington. A believer is an optimist who thinks of tomorrow. Market-wise, let's take a look at it out here. We had the Dow up 13, Nasdaq up 2, S&P's up 2.5. Gold contract up $22, trading at $1,307 an ounce. Silver up 23 cents at $20.07. Platinum up 9 at $1,463 an ounce. Copper off 4 pennies at $3.16 a pound. Light sweet crude down 40 cents at $96.99 a barrel. Bonds, we have the 10-year up 4 ticks at 125.16. What the 10 years done right now, folks, it is laying right at the May 29th high. I suspect we're going to blow that high away. That's the B point of an ABC structure on the way up. 30-year up 5 ticks at 138.17. That had already confirmed an ABC structure on the way up. King dollar down 111 ticks at 81.50. She went to a higher high, has the volume, pulled back slightly. She's going to 81.50. Euro 133.79. The yen is out there down 53, trading out at 102.07. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. What do you have? Can't handle price. That's the bottom line, folks. You're at 1920. You get a sideways move. The low out here today was 1911. High 1920. Closed at 1920. Have volume out here of 687 million versus 700. You're building cars for lower price. This is a 75-point ABC structure on the way down. You go take a look at the SPY, folks. SPY, we did 92 million shares. We're off the high of 199. We're at 192. I suspect we're going to be making this run down here at the 183 level. Dow Industrials, we take a look inside the Dow. What you have with the Dow Industrials? Dow Industrials closed out flat, up 13. The Dow has already got inside its lower range, the lower range being 16,600. That's saying that Dow's making a run for 16,015. And you have that benchmark out there, 15,340, which is the February 5th benchmark. We go look at NASDAQ Composite, same deal, sideways move. We're at 4355, 4371. Once it got back inside there, folks, that sets up that range. That sets up the lower range in the NASDAQ. And the lower range in the NASDAQ is 3946. That's a long way down. That's 400 points down. That benchmark, by the way, if we go over and take a look at United Technologies, it already blew that benchmark away. That was 107. We're at 103.79. Boeing did the same thing. Well, Boeing was pushing into it today. Let's see what Boeing did. Boeing took it out today also. The benchmark in Boeing was 118.77. Boeing right now is at 118.34. So that little baby also took it out. After the close out here, let's see, GMRC, which is Curry Green Mountain. Oh, GMCR, I think. GMCR. That closed at 118. That's trading right now at 113. It's not the end of the world. That's going to go back to, oh, there's still a gap that's wide open there. Let's see what they say number-wise. Okay, so their sales, third quarter sales was $1 billion. Imagine $1 billion in 90 days. That's pretty intense. That really is intense. Their estimate was 88 cents. They made 98 cents. Big number. MCP, look at this one. What is this? This is a mortgage company, I think. Oh, this is Morley Corp. Oh, no, that can be up 16% when it's only $2 stock. Morley Corp closed at 204. That is trading at 233 right now, and they missed on revenue. The estimated loss was 23 cents. They lost 29, but the bottom line, it's up about 13 cents. Let's go to Mike in Thailand. Hey, Mike, what's going on?
How you doing, Tom?
I'm doing great, man. You having a good day out there?
I'm okay. I'm a little tired, so if you can bear with me, I'd super appreciate it.
So, what time is it in Thailand? Let's see. It's it's 4 in the morning or something, right?
3:11.
3:11. Okay.
Yeah.
So,
I gotta. Go ahead, Tom.
What are we gonna look at?
Okay. Here's. I'm wondering why you haven't brought this up. We just pushed into a high on the dollar. We beat out the 81.58, which was the November 2013 high.
Okay.
If we pull back from here,
yeah,
okay,
yeah,
that's a big if. Who says this market? Who says this reversal isn't for real and we're going to rally from here?
Are we talking about rallying the Dow, the dollar, or what?
Everything. The Dow, the S&P, all the markets.
Hey,
I just like to know your thoughts on that.
My thoughts are that the market's going down, the dollar's going up, and gold's going up, and bonds are going up.
Don't you think that gold could be sniffing a top in the dollar right now?
No, I think now this is going to get really intriguing, folks, because we haven't had a political event versus a monetary event in the metal market in a long time. My take on this, the gold right now, Mike, is that that's going to be a political event with Putin, not the monetary event. And that'll be a fast event, and it will be over fast, too. The Putin deal won't be over fast, but the expansion in the gold market will be one of these fast, furious $70, $80. We'll sell it. It'll pull back again and just build more cars. But I don't see it as, because the differential, folks, is that when the market goes down, it likes to take everything with it. This correlation here is a little bit different. But you can see that over in Thailand. Where in Thailand are you?
Rayong.
So where is that into correlation of Bangkok?
It's about 3 hours south. East.
Okay. Well, I mean, you know,
I live in the industrial state in the oil. I live in the oil belt.
Okay. You know. So we'll see where it shakes out. But listen, man, thanks for calling. We appreciate it.
Wait.
Oh, go ahead. Okay, go ahead.
I got one more for you.
Yeah.
Okay, Rig, you're right about Rig having big problems, okay?
Yeah.
But what makes you think it's going to break right here while it's so close to support?
That it's so close to what?
Support.
Well, that's not support, man. Support. Rig has gone down from, what, $160, and you're telling me that $38 is support?
Wait, well, it's 37.8 is the March low, and we hit a low today. We closed on the low of 38.13. So we haven't broken that yet.
You know, hey, listen, you're gonna love this, Mike, because I think you've been in the Tigers Den before. One of the Tigers saying it's support, all right. It's life support, man.
Now, can I tell you something?
Yeah.
You're right about them having. I used to work for them. Okay. And they do have big problems. Okay. So you know what I have my eye on now while I'm watching Rig. If that breaks, that's going to tell me that oil. Because you know, as you know, the biggest offshore driller, right?
Right. So is that? I mean, they have problems because we have so much oil in the Permian Basin, right? I mean, you don't need offshore drilling as much. Is that what's going on?
Well, you're talking really fast. I'm not. The connection isn't. The connection isn't as great. And I'm tired too.
It would be the fracking business versus the drilling business.
It depends what context you put that in.
Yeah.
But you know what else I'm looking at in case you're interested in me knowing. I'm also keeping my eye on NBR, Neighbors now. They're the biggest onshore drillers in the world. When that breaks, then
okay.
we have something.
I'll keep an eye on it. You have a great one, a safe one, Mike. Thanks for calling. Get some sleep, man. You stay right there, folks. We'll come right back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Investors, Taz Market Research delivers to his subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Time Tom takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We had the Dow finish up 13, NASDAQ up 2, S&P's up $1.50. And as we do each and every Wednesday at 20 past the first, the second hour, we get our man, Mr. John Logan. Don't forget, folks, at TFNN, we do 10 hours of live programming each and every trading day. Our man, John Logan, starts us off 8 o'clock in the morning. Outstanding show, folks. And as he starts us off, he also has a video up there. In fact, you know, we have the videos. John gets the video up there every day, but the bottom line is that watching the show, folks, you get not only just one video, you're going to get all these videos as John dissects and bisects the global markets, getting you ready for the trading day. You can check the video out each and every trading day right on the front page of TFNN on the right-hand side. Of course, you can get all the programming at TFNN right on your cell phone, tfnn.mobi. If you'd like to get Tiger TV, right on your cell phone, just go tfnn.com on the right-hand side, hit that TV. You'll see the TV going. You'll get the audio. You get the video. John Logan, what's going on?
Hey, Tom, how are you today?
I'm doing great. Hey.
I was feeling for your caller from Thailand a while ago. You remember I was calling you about 3:30, 4:30 in the morning?
Yes.
Back in those days, so I was feeling for him.
I bet you were, man. You were working, getting up that early. Oh, my God. Because that's intense. There's no doubt, man.
That was interesting. Pretty much staying up 24 hours a day back then.
Yeah.
Hey, what's going on with the gold market?
You know,
what happened?
I like how it's trading. I mean, it's going to get interesting here because if we could get another day of strength, we're going to have some action here. It got the wide price spread. It had the volume behind the move. It came into the sign of strength, the last few days, and it had done that with lighter volume, and that's what I did like. There's no doubt about that. So.
Yeah, that 1,300 level, again, has been breached, but, man, it's just, God, what a nerve-wracking thing to try to get that thing to move one way or the other significantly right now,
It is. No, listen, and it was teetering. There's no two ways about it. This thing was teetering, specifically in the context, folks, that as it was coming back to the 19th day of strength, June 19th day of strength, it couldn't hold price, so...
It's something like you look back over time, and this thing's just compressing, lower highs, higher lows, right into a point almost. And it's scary the type of move that can happen after this type of price action over time. Yeah. Unreal.
Right.
I mean, gold's, you've seen this a million times. It always seems to make a weird move one way before it actually goes significantly the other way, and you just got to be kind of sitting in your saddle and kind of prepared for those things.
What you're hearing here from John, folks, this is pretty cool. Because what does happen in the marketplace, and this is after you've been doing this for a while.
Oh, God.
You can get leery of moves when something doesn't do anything for a while, folks, right? Then you get a move. Most of the, I can't say most of the time because mathematically I don't know what the percentage is. Right. But intuitively, right, you guard against it. It's like, okay, man, you know what I mean? It's like, is it going to be is the false move first, and then we're going to expand, So.
Well, when you see so many things like that happen, and you got a hard drive in the back of your head that's just crammed full. I'm talking gigabytes full of market experience and seeing this and that. You really get jaded a lot of times on that initial move. You almost have to wait and see, is this the real move or not? And that guy that called you earlier, I happened to be listening to the show, and that the guy was like, oh yeah, this trend line's up, blah blah blah.
Yes.
And that's not trading. I mean that type of attitude. If you had that. Oh, the market's, I'm sure he bought the lows in 2009 and he sold at 1980 the other day. I'm sure that's what he did. But But to look at, things that are happening around you and kind of like, you've seen this before, you've seen this movie before, you know the probabilities of where's the risk? The risk right now has been to stay long, and you try to, in the stock market, that is, in my opinion, probably yours. And, you have to use those tools that you have to just pick your battles and say, you know what, enough's enough. And, we could have a 20% correction. And do I want to be hanging on to a bunch of longs and waiting for a new trend line to appear? I don't think so, So, we've been talking about 1961 breaking for a while. And then, we've had a 4% pullback in a matter of, 4 days?
Yeah, no, it's...
And compressing that time frame together, my God, has the market moved up 4% in 3 days before? No. And that's that same kind of mindset. It's like, let's pick our battles, let's put the stops in, and if we're wrong, we're wrong. We take our medicine. It's lose a little, lose a little, lose a little, make a lot. It's not make a little, make a little, make a little, lose a lot. And I just want to kind of grab that guy and say, look, you gotta get with the program here. We're trying to trade and we're trying to do some market timing,
Well, I figure, I needed that call being a bear. No, that's what happens. Folks, John, hey, this is, you want to hear how crazy this is? And if you've been listening a long time, folks, right? One of the best trades that we could make, right? I'm going to stay with the gold market. And the reason I'm going to stay with that is because it's been so consistent inside the gold market.
And the best trades are always the scariest, by the way. You know that.
Right. Well, and what has happened is this, is that inside the gold market, right, if everyone's calling and wanting to buy gold, that's definitely the sell, right?
Exactly.
The buy is when everyone is absolutely not calling, and if I can go 2 days without one gold call, that's the buy. Now, that has been consistent, folks. And when it happens, it's like, oh, my God, we can throw everything else out. I'm only kidding, but the reality is you almost could, okay? Now, the reality inside the S&P is pretty close to not that call there, because that was a decent call, okay? Meaning it would be a call that someone is absolutely flipped out and, telling me I'm an idiot. Yeah. That's the ultimate call I need when I'm at highs like this.
He was definitely saying things that were self-evident, like looking at what's before us right now.
Yeah. But it's interesting, isn't it? That contrary deal is something that you have to pay attention to. And in that context, I know you're working on something that is amazing. John showed me something that you're going to see in a little while, folks. But he's working on something that is contrary.
It'll hopefully, and again, I think your caller had some really good points. I'm just saying that we are looking at things on a little bit different type of attitude, a trading attitude, not a long-term investing attitude, and that may be very appropriate for that ballgame. But on a kind of a trading arena, a lot of times when you notice these patterns, a lot of times now there's a bank of PhDs sitting up at J.P. Morgan that are also noticing these patterns and going, hey, wow, everybody's noticing these patterns now. Let's try to shake some people out. And those are trading opportunities. Now that's on a whole different level. But
sure.
We've actually ramped up and spent some significant time on something that we're getting ready to come out within this plan that we're getting ready to offer on TFNN, and it's a tool that actually really helps you identify not only where stocks and instruments are as far as profiles go, and that's a really good barometer, I think, for any individual instrument, but it's also going to give a market sentiment type of angle, which would enhance what that caller was talking about. And should we stay long or try to pick the other way?
It quantifies it, exactly.
Yep,
it's absolutely awesome. Listen, folks, tomorrow morning, 8 a.m., get our man, Mr. John Logan. John, have a great one, safe one. We look forward to the show tomorrow.
Thanks so much, Tom.
Coming right back, folks.
Okay.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We Dow's now finished up 13, Nasdaq up 2, S&Ps are up $1.50, and we were talking with about rig. Transocean, that closed at $38.15. They come out with numbers. It's trading right now at $38.98. I'll tell you, it's amazing. Number-wise, they're claiming they made a fortune, and it's amazing that the stock can't bounce. The estimate was $1.11. They come with $1.61, so they're still not believing it. You do have it up 60 cents right now, 70 cents right now. That's not going to do anything because the stock already did break its lows with volume. You know, we did 8.3 million out here today. Yesterday you did 11 million. You're going into 8.1 million, 6 million, and 14 million. So you're going to actually have it broken more than likely, meaning this benchmark here from the 17th of March on the daily and the weekly. Let's go to Jim in Denver, Colorado. Hey, Jim, what's going on?
You're the man, Tommy.
How you doing, man?
Good, good. Tim, not Tim.
Tim, how you been, man?
I was going to say. Call the only one who calls it like it is. Tommy O'Brien.
Yeah, too much, man. Hey, how's the music going?
Good.
Sweet.
Couldn't be better. You know that.
That's a beautiful thing, man. That's good. That's good.
Hey, I was going to ask you, I got a position in QID now. I don't know, I would like to add, but I don't, I like to have a pullback to add, but what are you thinking about QID? I mean, I know what you're thinking, but I just want to get your feel on it.
I'm with you. You know what's so funny is that let's go take a look at this. So
this market is I love this. I got a good feeling here.
So
this is the best it's felt in a while.
No, I'm with you, man.
You know what I mean?
The QID right now, I mean, it looks like we got a small ABC structure on the way up. You know, your A point on this is 46.15. Your B is 49.50. That's $3. You know, what you're going to need is that as you go over 49.51, you're going to need more than 4.1 million shares, but that's easy to do in the QID. I mean, to me, the QID is sticking out like, this is an intense number, folks, but 61 is sticking out like a sore thumb. You know?
Yeah, I know, and I want to add more, but I don't ever add unless I like to add when it's going the other way, you know what I mean? I don't know, just the way I trade it.
Right.
But I don't have as many shares as I'd like.
Yeah. The real question's going to be, I think, is, okay, so watch. We're at a Tuesday. What happens in the summer, folks, is that you got Tuesday, Wednesday, and Thursday to get the volume in. Now, what we definitely, had last Friday is that thing came down hard with volume. So it's like, okay, is that characteristic going to change because we get volatility in the marketplace? We'll find out. But,
would you add any here right now?
If you're not comfortable, no, I wouldn't. I was thinking about this morning on the way to work. What you want to wrap your head around, folks, is where February 5th is inside these indices, okay? So if we go to the QQQ, because my point, Tim, is that we have a long way to go down, and in between that long way, there's going to be bounces, that you're going to have a shot to do that.
Well, it's deviant because everybody's been in the buy mode for 4 years here, so everybody's trained to buy, so it's tricky. And I had to change my attitude here a little bit too. You know what I mean?
Yeah, I do. No, there's no doubt. Listen, and they've got rewarded. I absolutely agree, man. And so we're at 94. February 5th is 83. And that,
I know.
The way that Boeing has traded, the way that United Technologies has traded, the way that we've had equities get blown out of the water and gap down with monster volume, that's telling me that the February 5th deal is not going to hold either. I mean, so we'll see how that shakes out. But what I would do is that if you're day trading, what ends up happening is that intraday, these bounces have been sweet. I mean, if you're watching Tiger TV right now, I'll put the Qs up. If you want to see what the Qs did, folks, on the intraday bounce today, it is like a classic, meaning a classic out of time in the trade. You come down on a 10-minute with 4.3 million shares on a 10-minute at 15.50 on August 4th. We went into that today at 1140 with 800,000 and then tested it with 366,000. So your correlation is 366,000 shares at the high of today, 95.11. That was testing the high that was established at 11:40 a.m., 800,000. But guess what? it was going into 4.3 million. That's a classic, you know. And then, you know, what you also had out here is the high volume low from 0930 of 93.92 that has 2.7 million. So, you know, you get a bounce like that if you're around, if you're not strumming the guitar, then...
Buy them up and rock and roll.
I love it, man. I love it.
Thanks, Tommy.
Hey, have a great one, man. Have a safe one. And so if you look at the, they all did that. All the indices did that, by the way, folks. If we go take a look at the SPY, you're going to see the exact same correlation. Actually, the correlation in the SPY is actually a little more intense. The SPY was going into 1330 from yesterday, not the prior day. We're going into 4.2 million shares and 9.8. The first leg up today at 1140 had 1.8, and then it tested it with 1.3. Those correlations, guess what? That's a normal bounce in a market that wants to go lower. How do you know? It's the correlation with price and volume and a give up and a rejection of price. That's how that shakes out. And you're still on the SPY, has that high volume low at 191.08. That has 6 million shares out there. So if we go over to the DAX in Germany, what you had with the DAX in Germany, she went south. She's already into the lows that were established were by the February 4th low. What happened in Germany, just as it happened in the NASDAQ composite, is that when it came down in March, it came down lower. The February 5th low was 9071. Actually, no, we got to 9030 today. So it's right there at it. And the DAX in Germany is going to be what you're going to want to be watching to see where the rest of these indices are going to go. You know, tomorrow morning, you know, bottom line, because the DAX right now is trading where it was trading in November of 2013. That's where we're at. And let me see. I think I got the volume on this right now, too, which is awesome. Let me put the daily on. I think it's late enough in the day that I get this volume. So, no, I don't have it yet. Some days it pops. No, I don't have it yet. So we are, you know, right at the lower levels. The FTSE and the UK, which have the FTSE, she gave it up today, down 46 bucks. She is running after the swing lows that were established last March. You know, we'll see how that whole baby does shake out. And as I said a little bit earlier, actually, let's go to GE. We haven't done GE yet. What we did do last hour, folks, is that United Technologies broke its benchmark from February 5th. You had Boeing break it from February 5th. GE bounced today, up 42 cents. Have some juice underneath it, too. 47 million shares. We'll see whether that can get to higher price. My take on GE is that it's not only going lower, a lot lower. So we'll see where this bounce goes. Why? Because GE has a benchmark out there of $11.35, which is insane. But that's the benchmark. The lows that were established in 09 never got tested. So, you know, and if you're wondering why some of these stocks that have got taken apart, how they can get taken apart so quick, the elevator down is always much quicker than basically the escalator on the way up. And when you have these high volume lows that haven't got tested, it's like they come out of nowhere. And if you want to see an equity that did, you know, come out of nowhere even today, is that, and this was a high flying equity, by the way, is Cognex Technology. She's down 631, been hanging at highs for quite a while. Not only just blew out with some monster volume, and now what you're going to have volume off the highs, and you know, 38 is game on the way down. New Skin, this equity, if you want to see what happens with when you do have a stock that has volume off the high, you got to get out of the way, folks, because volume off the high, New Skin had already had it. The last time that New Skin had any volume on the way up was August of 2012, $56. So the stock goes up almost 200%. It goes from $56 up to $140, $139 with no volume. It takes it takes about a year to get up there. It took a month. Well, it was actually only a day to get back 140 to 67. Now what does it do today? Gives up another $11. what you're going to see is that right now we're at 46. New Skin's going to go after that swing low. That swing low we're talking about is 32. She gives up 32. If she hits 32, let's see. Yeah, we almost got a whole month. She's hitting this thing with volume. She's gonna break loose in that 32, and that's a lot lower. 877-927-6648. Give us a call, folks. Come right back.
Andy Heck's powerful weekly newsletter, the Technamental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technamental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technamental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar. because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Tom O'Brien.
Welcome back, folks. Don't forget, tonight from 6 to 7, folks, Allie Ford, myself, we have a show, Mindful Living, right here at TFNN. You can get all that programming, TFNN.mobi. Let's go to John in New York. Hey, John, what's going on?
Hey, Tom. Thanks for taking my call.
Sure. Thanks for calling. Thanks for holding. What are we going to look at?
ESV, Ensco.
ES...
V as in Vinny.
V, okay, sure. Okay, let's take a look. So it's an international offshore contract drilling company. The company's operations, Asia, Pacific, Middle East, Australia. Okay, so the low's 47, the high's 62. They pay a 6% dividend at this price. Okay, so you're looking to buy this? You own it? What are we doing?
I have some at an average price of $49.69.
Okay.
And do you recommend adding to it? What price?
No, I wouldn't add to it. I mean, this is trying to break this bottom right now, 47.85. Let me pull this back a bit. Put this on a monthly. So when this had the, if we go back to 2007, it was at 83 bucks. 2008, it goes down to 25. Then it bounced all the way back to 65. But if you see that 65, when it bounced back, you did 41 million shares versus 76 on the way down. Let's just stop it dead in its tracks. Now, not the end of the world, 45 bucks. I mean, it looks like it could go to $45, man. I'd be careful here. Let me go back over to Rig just for a second. Say, Rig just come out with numbers, and Rig can't even bounce. It was down 42 cents. Now it's up $1. But if you believe the numbers that come out with Rig, it's like, these are wild numbers. I mean, they're huge numbers. Estimate was 111. They made 161. Revenue, they're up on revenue. Revenue is 2.26 billion. They did 2.33. So looking at that, ESV, let me just go back to this for a second. I'd be careful. That's the bottom line. Are you going after the 6% dividend? Is that what you'll?
Yeah.
Yeah. Right.
Yeah.
Okay. I can see that. So let's figure this out. 6%. If you give back $3 in price, it's not the end of the world, right? I'd be careful though. This is coming into these lows with too much volume. That's what the problem is. And if you really break that 47.85, it's like, man, you could go a lot lower. So let's see when they come out with numbers. Oh, not
somebody put a sell recommendation on it.
Yeah, well, I think, let's see. Offshore, they're having problems. It seems like Rig has had huge problems. I mean, the bottom line with Rig is that, that went from 169 down to 38. And, I mean, I don't know that business, but what is happening is that the amount of oil that they're getting onshore from fracking versus spending billions of dollars for those large offshore rigs, it's huge. You know what I mean? Because what has happened now is that companies that want to find oil, they're spending a lot of money on geologists that understand the fracking business and the pressure business, and that's the name of the game. And, you can get a slew of geologists for, a lot less than you can get those big rigs for. So, cooking, brother.
Thank you.
Okay, man. Have a great one. Have a safe one. Let's go to Bill in Boca Raton. Hey, Bill, what's going on?
Not too much, but I'll tell you what, for people who haven't listened to it a long time, and I have, boy, when you start picking lows that seem incredible, they're not a couple months later. And I remember one day you picked Boeing to go way down, and I was like, can't possibly go that far. It went beyond that. And so people better be paying attention to you.
Well, no, I appreciate it. You know what's so crazy, Bill and folks? Let me, when I pick them out, I don't do this on purpose, okay? I mean, you know the system. The system is the lows, the volumes, and I've been doing this long enough that they always go. But I absolutely agree with you. Sometimes I look at them and say, oh, my God, hold it. That's sick. You know what I mean? It can happen, right? Because it seems like, I can tell you right now, even though I think the S&P is going down to that 737, that seems unrealistic, right? I mean, it really does. You know, we'll find out, though. But that number, folks, is the benchmark from February 5th. Yeah, so we'll see.
Well, I tell you, that old saying, if you're just a bull and you're not sure, standing aside is a great place to be right at the moment.
That's a fact. It absolutely is, because what does happen, and this is something to wrap your head around, folks. If you've been in the market, you're in the market, you've made a lot of money, there's nothing wrong with, and this is hard to do, to say, okay, I'm not going to be greedy. I just want my money. Don't go short. Just you want your money. You want the cash. Because what happens in pullbacks, if you have cash, folks, you're already richer in a tremendous way, not in a small way. Okay, you know. So I know it's a great point, Bill. It absolutely is. You don't have to be in the market 24 hours a day. That's another part. And guess what? There's other parts, other things you can invest in. Okay, you don't have to invest in the market. You know, so.
So my question is, if you were stepping in over some sort of time as it's going down, as you're trying to get on the elevator or what have you, what kind of spacing would you use if you had, whatever amount of money? It doesn't matter, but let's say you're going to put in $100. What kind of spacing do you think you might want to do?
I would wait for to buy, right?
Pardon?
To buy something, right?
To go short, yeah.
If you're going short, what I would do is this: I would wait till this leg is over, because half the leg is down right now. Okay, you do the next bounce out of that, and that next bounce out of that, I suspect, if we look at the SPY's at 192. It'll get down to 189 first, and then the thing can bounce all the way back up to 195. And the correlation there would go like this. As you're bouncing back up to that level, as long as you're bouncing back up to that level, what that's doing, that's going under where the whole breakdown has just occurred. You get that, that'll be a nice trade. And that, those setups are going to happen. This is not going to be a one-way deal on the way down. I just, and that's what two different things end up happening there. It confirmed on the way down. You had the expansion of volume. You already had the high with light volume. Then you had a nice big counter trend bounce with light volume. That's the setup, man.
So you're looking at just waiting until it touches that neckline that it broke.
Exactly.
Okay.
Okay,
great.
man. Have a great one. Have a safe one. And, there's nothing wrong with having stops in, by the way, either, folks, okay? And, take it for all what it's worth. That's the bottom line. Don't sit there and do nothing, okay? Have a plan, folks. Always remember, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership, and fly with it. Thanks for being here, folks. Have a great night, safe night. Look forward to speaking to you right here tomorrow. In fact, come back with Allie and I, 6 o'clock, 6 to 7 tonight. TFNN.MOBI.